Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. Stock market having another down day. Shocking, right? It's not bad. I guess we're down a little over 150 points on the NASDAQ is the one that's really getting hit the hardest. The Dow and the S&P are kind of flat today. All right, so is this market going to find the bottom? Well, eventually, I guarantee you, we're going to find the bottom. Now, is this the big crash? Everybody talks about the big crash. This is it. This is it. We're in a bear market. We're going to have the big crash. I don't think so. I don't think this is the big crash. It's too orderly. It's too slow paced. When the big crash comes, you're going to know about it. It's going to happen fast. It's going to be like 50% like in a day or two. It's going to be wild. This is not the big crash. This is not the big crash. They will pump this back up. Now, how do they pump it up? Okay, well, let's talk a little bit about that. Look it. Is money still cheap? Well, let's think about, to me and you, maybe money's getting a little more expensive. Like if you went to borrow money for a house, it would be, 6%. That's getting more expensive. But to the corporations that borrow money from the Federal Reserve, they're still getting money for 1%. 1% is pretty cheap money still. So how are they going to prop up the stock market? Well, they don't want it to go down. They got to prop it up. Well, they do this with stock buybacks. They borrow the money from the Federal Reserve and they buy their own stock back. Now that makes the stock price go higher because there's less stock to bid upon, and therefore the price goes higher because the earnings will look better. And they want to look better because, well, that's how the CEO of the company gets his bonus. His bonus is based on earnings, and if those earnings look better per share, the price goes up and then his bonus increases. Okay, so we're in the middle of a quarter right now. I mean, I do think they're going to run this up into the end of the quarter, which would be, let's call it the end of June. We should be going in a run-up next month. All right, so this May month is pretty much a down month, and so far, we're actually had 5 straight weeks down. This is 6th straight week. We are down this week. We're looking to close out the week lower, but I do think we're going to get a bounce. I really do. We'll see what happens, but when they buy back their stocks, it makes the stock prices go higher. Now, they coordinate this with their hedge fund friends. They let their hedge funds friends know. They say, hey, we're buying back our stock. You might want to front run that because we're going to spend $5 billion a month buying back our own stock. We're borrowing the money from the Federal Reserve, and we're going to buy our own stock back. So you want to get in ahead of that, and you want to make your profits. So the hedge funds will make their profits also. It's kind of a rigged game. Now, the game is not over yet. When the crash comes, that's where the game comes to an end. But this is not the crash. They don't want to kill the golden goose. Mark my words, they will bid this market back up. Now, we're looking for that bottom right now, and we're getting close to it. We might not quite be there yet, but we are getting close to that bottom. And this market will get bid back up. Will we see a new all-time high? That I'm not completely sure of, but we will approach that level. I do believe that. I do believe that we're looking for a short-term bottom. At the same time, we're looking for a long-term top. We have this topping process in play right now, and we're trying to find where the top in the market is. And that's the process that, well, it can be painful right now because everybody's losing money, market's going lower, but I would be cautious shorting it right here. You can get these rallies that they just rip your face off. I mean, they just explode higher. Short covering. So when the corporations start to buy back their stocks, that makes the stock goes up. The hedge funds are front running that because they're the friends are tied in with the corporations. And well, me and you, if we're short, we get our face ripped off is what happens. So be careful out there. So I do think we're going to get a run up pretty soon once we find that short-term bottom. Okay, so I want to talk a little bit about that. I mean, this is actually kind of a funny one. Okay, so California, where I live, they're coming out with this first-time home buyer program. Now, they've had plenty of first-time home buyer programs, but the midterm election's coming up, and they want to buy the votes of the people. So they come out with this first-time home buyer program. All right, how does it work? Well, they're going to give you 10% for a down payment. They're going to give it to you. Now, in California, average house, let's just use rough numbers. Let's call it $800,000, right? So they're going to give you $80,000, and you put up $80,000, so you got 20% down payment, right? And then you can go buy this house, but most people don't have that extra $80,000, so I'll talk about what they do. They will do what's called an 80-10-10. The 80% loan, the government's going to give you 10%, and they're going to borrow the other 10%. Now, it's really funny how it all works, and there's some shenanigans that will go on. You can't show it in the recording that the extra 10% was actually borrowed also, otherwise they won't give you the 10%, so that has to be recorded, has to record and then record. It's a double recording is what it really works out to. It's funny stuff. It is. I've been in this game a long time, and it's shocking what actually can go on. But okay, so the government's going to give you 10%. So let's think about this. They're going to give you $80,000 to go buy the average house, right? And you're going to put down the other $80,000, or you're going to borrow that $80,000. That way you have it to put down, right? But here is the caveat. Okay, so anyways, you have to make less than 80% of the average income for the area. Now, in California, these are rough numbers, but in California, the average income is $62,000 a year. Now, that sounds low, right? But that's what the average income is in California. Now, to buy an $800,000 house, you're not going to be able to do that on $62,000 a year, even if they give you the $80,000 down payment. So you're not going to be able to afford this. But you can't make the average. You got to be 80% of the average. That's the most you can make. So let's say that 80% of 62,000, I'm not even sure what that number is, but let's call it 50,000. So you got 50,000 is the most you can make to buy this $800,000 house, and the government's going to give you $80,000. Now, here's the good news. You do not need to pay that $80,000 back, right? You don't need to pay it back. It's like everybody gets a house. You ever see that Oprah Winfrey where everybody got the car? You get a car, you get a car, you get a car. This is with houses. You get a house, you get a house, you get a house. Well, guess what? You're not going to be able to afford the house. You're probably not going to make any payments on the house. So it's kind of like, well, okay, we got the house, we moved in, we borrowed the money, the government gave us the other money. Oh, we're just done. We're not going to make any payments. It's like a free house almost, isn't it? Well, I think this is a terrible program. I don't think it's going to work. Here's a couple of, food for thought. If someone cannot save a down payment to buy the average house, maybe they shouldn't be buying a house. It's pretty simple, right? I mean, if you just giving them the down payment, that's not going to solve the problem. There's expenses in houses. There's property taxes. There's insurance bills. There's expenses, and they don't have extra money. They've proven that because they can't save up to buy the house. But our lovely governor, he's going to come in there and he's going to buy their vote because we got an election coming up, and this is a first-time home buyer program. And we don't want those houses to come crashing down. Remember, the real estate market is 60% of the wealth of the entire world. 60%. We cannot let that come down, right? I mean, we're going to prop that up as long as we can. How the real estate market is responsible for 30% of the GDP. And we can't have the GDP coming down even though we had a negative print, which means we're already in a recession because we're going to get a negative print again to confirm that we're in a recession. But if you continue at this pace, I'm telling you, we're going to skip right over that recession and we're going to head right for the Great Depression. But, I don't want to be all negative and stuff. This is all good stuff. They're giving away free money. 10%. You don't need to pay it back if you live in the property for 5 years. 5 years, then it's just forgiven. Well, where does this money come from? Do we have all this extra money? Is it just sitting there in the coffers waiting to be handed out? Or is this money that we don't have, that we're borrowing, and that us taxpayers go on the line for, and that we're responsible to pay back? I think it's kind of the latter. I think that the taxpayers are going to be be on the hook for another bill again. But maybe it'll get our governor reelected. Maybe this will buy him the votes that he needs. Look, he needs a little help. I'm telling you, the guy is just, he's just bad news, but we can't seem to get him out of here. I mean, he just keeps buying the votes, I mean, I guess he's got that extra money. Anyways, I went on a little bit of a rant today. If you like this stuff, give me that thumbs up. You really like it, punch that subscribe button so I can talk with you again later. Yes, get out there. Have a great Wednesday, everybody. We'll talk again real soon. Bye-bye now.